Welcome to Iraqi Dinar Update, your go-to source for the latest news, expert insights, and real-time developments on Iraq's currency, economy, and financial reforms. Whether you're a long-time investor or just curious about the dinar, you're in the right place. The comment, brief as it may be, touches on a range of significant developments and undercurrents in Iraq's financial and monetary landscape that are both subtle and transformative. When someone remarks that things are still quiet on the bond and banking side, what they are referring to is the prevailing silence or lack of major visible movement in two important areas of financial reform and economic signaling. The bond market, particularly sovereign debt issuances or public offerings, is often a strong indicator of how a country plans to fund infrastructure projects, manage fiscal deficits, or engage with international investors. In Iraq's case, the bond side being quiet might reflect that no new sovereign debt has been issued or that anticipated moves, such as dollar-denominated Eurobond releases or local currency instruments aimed at domestic development, have yet to be activated. Iraq has the potential to tap the bond markets more assertively, but political uncertainty, security concerns, and monetary policy realignment often delay such plans. Similarly, on the banking side, the quiet might point to a moment of pause or strategic patience. Iraq's banking sector has been undergoing profound reform, spearheaded by the Central Bank of Iraq, CBI, with efforts focused on digital transformation, regulatory tightening, and compliance with international standards on anti-money laundering, AML, and counterterrorism financing, CTF. But for those closely watching the momentum, the quiet could be the proverbial calm before the storm. Behind the scenes, several banks have been modernizing core systems, adopting swift payment capabilities, enabling cross-border payments via international platforms, and implementing the ISO 20022 messaging standard, a global financial language designed to enable real-time financial communication across borders. That kind of deep restructuring is often invisible until it is launched with a formal public announcement, so what appears to be quiet may in fact be active preparation. The mention of a contact reaching out with the news that the Iraqi dinar has now secured an official spot on Forex, or the foreign exchange markets, carries significant implications. To many observers, particularly those who have followed Iraq's post-2003 economic evolution, this could signal a shift from a largely closed, restricted currency environment to one more aligned with international norms. The dinar has long operated under a managed peg to the US dollar, heavily reliant on central bank auctions to regulate supply and demand, often used to control the parallel market and smuggling of hard currency. But if the dinar now has an official listing or visible representation on global forex platforms, such as Bloomberg FX, Refinitiv, or real-time trading boards, it indicates that steps are being taken to allow international banks, institutions, and traders to observe, monitor, and potentially engage with Iraq's currency in a transparent and accessible way. This type of visibility is not merely cosmetic. When a currency is recognized on forex platforms, it becomes subject to real-time valuation mechanisms, pricing transparency, and broader scrutiny by global actors, including central banks, sovereign wealth funds, hedge funds, multinational corporations, and foreign exchange analysts. In practical terms, this means Iraq may be laying the groundwork for a more open currency regime. Whether this shift leads to a full float, a managed float, or simply a more credible peg with transparent market data, it marks a departure from opacity and restriction. For years, foreign investors and observers have complained about the dual exchange rates in Iraq, the official rate set by the CBI and the parallel market rate that reflects real demand in bazaars, private exchanges, and the informal economy. A move toward global forex recognition could help unify those rates, reduce speculation, improve monetary policy credibility, and attract more direct investment. If the Iraqi dinar is now visible on forex, it also sends a strong signal to international partners, whether they are US investors, European companies, or Asian banks, that Iraq is opening up, not just symbolically, but operationally. It suggests that traders may soon be able to see bid-ask spreads, monitor liquidity flows, and potentially hedge currency exposure using standard instruments. That is a foundational step toward internationalization. Many developing countries have undergone similar transitions, from being hard-to-access financial environments to emerging market participants with currencies recognized globally. Vietnam, Egypt, and even post-Soviet nations like Georgia and Kazakhstan have managed such evolutions with varying degrees of success. Iraq may be next on that trajectory. Of course, caution is still warranted. Just because a currency appears on a forex platform doesn't guarantee full convertibility or international usage. Many currencies are listed yet still face capital controls, restricted remittance policies, or dual exchange rate systems. But for Iraq, the symbolic and strategic implications are clear. The country is laying the foundation for something bigger, something that requires precision, preparation, and institutional readiness. Those watching Iraq's monetary future, particularly those with long-held investments or interests in the dinar, understand that currency reform doesn't happen overnight. It takes political will, technical upgrades, international coordination, and above all, macroeconomic stability. Iraq's inflation is under control, and its budgetary reliance on oil, while still a vulnerability, is being gradually addressed through diversification efforts, including investment in agriculture, tourism, and industrial zones. The World Bank and IMF have both noted improvements in fiscal management and monetary transparency in their recent Article 4 consultations with Iraq. These reviews often provide subtle, coded encouragement or warnings, and the tone in recent reports has shifted toward guarded optimism. So, the news that the dinar is now officially recognized on forex markets, however quietly this was achieved, could be the starting gun for more visible changes to come. It may mean that Iraq is about to announce new trading partnerships, revise its foreign investment laws, or sign new bilateral currency agreements. It may also coincide with new tax reforms, customs modernization, and a shift away from dollar-based accounting for certain sectors of the economy. For now, the bond and banking fronts remain externally quiet, but the internal machine appears to be moving. From regulatory upgrades to international financial diplomacy, Iraq seems to be preparing for something that goes beyond technical tweaks. It is preparing for integration. For those paying attention, that's not just exciting, it could be historic. Thanks for tuning into Iraqi Dinar Update. If you found this content helpful, be sure to like, subscribe, and hit the notification bell so you never miss a beat on Iraq's evolving financial landscape. Stay informed and stay ready.